listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
Welcome back to the latest episode of Non-Del Influencers Podcast. I am so appreciative of Joel Horn joining us today. Joel, I swear we didn't talk about our outfits, I promise you. Joel is the owner of Horn Funding Group out in Colorado. Joel, thanks for taking the time today.
You're welcome. It's an honor to be here.
Yeah, so Joel, I want to start off with something that I think that you could really speak to, which was you've been in the non-Del space for quite a while, and you actually came into our world over here at First Funding when another warehouse facility decided to exit the business. Mm-hmm. And you shared with me that you've actually enjoyed the process of working with it. What's different between your experience in the past and maybe what you experienced at First Funding, kind of highlighting some of the things that really make it better, that, you know, that's necessary for you to do your job. Does that make sense?
Absolutely, yes. The operational flow of how to do business with First Funding is the main thing, specifically how you look at us as a non-bank entity, or that you're a non-bank entity. In our previous facilities, we were required to have multiple accounts with that facility, a pledge, an operational account, a haircut account. And from time to time, especially if you had multiple warehouse vendors at the time, the monthly, the quarterly, the auditing, the management of that process became laborsome. So being a small non-Del shop without a lot of employees, it's really taken that burden away from us. And then the other thing too, that I know we've touched on, instead of the quarterly reporting, now we report annually to you. And that's a big difference, I think. It helps with our auditing, it helps with our quarterly financials, but it really just takes a lot of legwork away, and helps us focus on business, not necessarily reporting.
Yeah, it's nice to hear that, because I think one of the things that ends up happening, right, is people come to a warehouse facility and the only thing that they're kind of making a dependence on is what's your price. That's typically the thing, right? But there comes a lot with price, and I do appreciate you saying that it's a little bit easier to work with. It's just because of the management side of it is not as cumbersome. So I would equate that to saving you time and energy on your side equates to money in your pocket for sure.
Well, if I could add another practical example of that, looking at liquidity, for example, now it gives us the ability to look at our liquidity and our needed net worth and all that on an annual basis. So, for example, now September, typically with other banks, we would have to be focusing on liquidity on our September 30th deadline to make sure, all of our lines stay correctly open. Yeah. One thing I like to do, and what we're going to do this month, is take a look at preemptively funding our profit sharing account for the year 2025, meaning into our 401k, into our profit sharing. That lets us take some of that liquidity that would just be sitting there anyway and moving it 3 or 4 months early into an active account. And of course, our employees love it too, because they get access to the funds sooner without having that need of liquidity. So I can use that liquidity for other things with our operational. We look at things a little differently on an annual basis, not a quarterly.
Oh, that's fantastic. I know we ended up hiring some people that were with the former warehouse provider. And one of the things that they really appreciated was the fact that they didn't have to chase down paperwork on a quarterly basis. Yeah. And it really depends on your loan size. I'm not going to say listen, we do have warehouse sizes that we do require quarterly reviews, and that's good, prudent business if you have a significant facility. But for a facility like you, which is a standard non-Del facility, the annual review process takes a lot of the pressure off of you and your business model, I'm sure. Yep. Take me through your journey, Joel. You've been doing non-Del for so long, and I think we talked a little bit about it before our call. We had a call last week. You did non-Del when it was harder to do non-del, if I'm not mistaken, right? So take me through that journey of what it looked like for you.
Well, Horn Funding started as a mortgage broker shop, I think for the first 2 to 3 years. And we then transitioned, I think in 2013, to the non-del space.
Yeah.
Believe it or not, basically nobody, wholesalers, account reps, nobody knew there was no blueprint out there, no game plan on how to actually do that.
Yeah.
It was basically, sign up for MERS, get your E&O insurance, and apply with a warehouse lender, and then there you go. But what wasn't necessarily talked about was the risk and the process flow and the mindset that needed to change. And more importantly, even beyond all that, what all the values are and benefits, and then actually how to use those benefits in the street. So it's been it took us years to figure that out. And once we did, it was like, oh goodness, this is great, especially going into the COVID world. It really helped us being non-del during that platform or during that market.
Yeah, I mean, I was a pretty successful account executive for a wholesale lender down in, based in Los Angeles out of here. And I did a ton of wholesale. And I got to be honest with you, like the non-del was so foreign to me, like that when people wanted to do non-del, I'm like, I don't really know what the process looks like. Like, I know we kind of do it, but the purchase process wasn't fantastic. The delivery, the structure of it wasn't really out there. So there's probably very few investors that you trusted at that point to really do it well, I would imagine.
That's right. And we had to learn the best process along the way. Trial and error, lots of error, lots of error. Lots of failure, lots of failing forward, right? You try it, you didn't do it right, and then you created a system to fix it, and then it turned into technology, and then now you're doing it right. Yeah.
I've been hyper focused on one of the benefits about moving to non-del, which is the AMC, the appraisal piece of it. Was that a big opportunity that you saw going into it, or you kind of discovered it along the way? Tell me a little bit about what that looked like for you.
It was when we did, because more so then than today, but when we did, if you remember, it was the appraisal world was a mess. I mean, it was taking 2, 3, 4, 5 weeks for appraisals. You were bidding appraisal costs, higher bids for a rush, $1,200 to get it back in 2 weeks instead of 4 weeks. So by gaining control of that in that market, that helped us, right?
Yeah.
It's not there today, but you never know. It could be there in a year or two if rates drop again into the 4s. That could happen again. So just the ability to control that process enabled us to really manage our shop better.
And it was the communication that became simpler, right? The wholesale side, I mean, I'll never forget the first day of appraisal independence. I was a wholesale rep, and I got a phone call that says, "Hey, your appraiser came in low on value," and I'm like, I don't know what to do. I didn't know how to solve the problem, right? Like, and then you had to involve like 16 different people to have a conversation about what the value should be, and et cetera, et cetera. But now, when you move into the lender world, I just love the idea of establishing that great relationship with an AMC that you know and trust. And you get to control that communication. No, you cannot have same policies still apply. You cannot have influence over value or anything like that, but you get to own the communication piece of it throughout the process. I think that's really important to it.
That's right, 100%.
So let's fast forward to where you are today. You kind of opened my eyes to some great things that you're doing on the non-delegated side. So I want to step aside and just kind of let you spell out why the technology build out, why the passion for it, because you do have a great passion for it. That bled through the demo call that we did together. Tell me what you're trying to accomplish with the technology that you're building out.
Sure. That actually started a long time ago, even before Horn Funding. I've been working on this 20 years, multiple iterations, right? And really, it kind of comes down to the fact that we didn't believe and still don't believe that there's a perfect system out there, right? There are multiple systems out there, wholesale systems, LOS systems, PPE systems, document prep systems. All these systems kind of out there that don't necessarily talk to each other the right way. And so a long time ago, we planted our flag and said, okay, we're going to build it ourselves. And, I'm one half technologist, one half mortgage person. Like you said, as we had talked, but where this current system that you saw, so we've built a whole business management technology around specifically the non-Dell space, including an LOS, including a PPE, all custom built. It's not perfect, but what it is exactly what we need and what we want. Every click is mapped out to a best process that we've really designed around the non-Dell space. And really where this came into play, where we planted our flag, Matt, and said, okay, we need this. It was right after TRID, I think 2016.
Yeah.
And we had an issue. We had a fail. We had a problem. One of our loan officers we were working on a legacy technology. And in that technology, there was one field, I think it was, how much do you put, if I want to, or how much does my loan term go down if I pay an extra $500 a month? Well, long story short, that fed to the CD, which then basically created an unsaleable situation.
Wow.
By one data field being out of whack in the sea of data fields that this LOS system had, right? Completely disconnected from all the other areas. So we said, all right, we're going to plant our flag on this. And we're going to build a better solution. And we're not going to allow this to happen with that solution, and be a lot more qualitative in our approach to our shop. And it's been, a journey and multiple iterations, but we are at a space now of potentially going to look at a broader market. I know you and I have talked about that because I do think our technology can help others. And I do think our passion can help others, especially back to the, helping that mortgage broker make that transition, helping to provide that blueprint, if you will.
Yeah. There's a couple things that it caught my attention. And when you move into the banker world, there's a couple other things that you need to manage, right? And Joel, I'm sure you're like me. I don't have more time in my day to add more things I need to manage, right? And you had a place for the insurance requirements that you need to carry. You had a place for what the advance rates were for your warehouse facilities, what the costs were. You just had all in one place, simplified information for people to grab at and go, you know what? My renewal notice for first funding is coming up. I need to get this done, right? Like you didn't have to rely on me and maybe missing an email or missing a phone call or whatever it could be. It's just all in your system so that you can have continued best practices. I just thought it was a fantastic demo.
That's right. And I think, where that comes from, once again, is the pain of missing a deadline or the pain of not renewing a vendor on time. What I like to say, Matt,
or Joel, hold on. Or canceling a vendor on time. That's something that we definitely talked about, right? You want to share that experience?
Absolutely. I think about 5-6 years ago, we had a technology. It was a 3-year contract, and I think we were paying $1,500 or $1,800 a month on it. And at the end of the contract, we recognized that we don't need this anymore. So great, the contract's over. We're going to get rid of this technology and move on our way. Well, there was a fine line in that contract that said if you don't basically communicate the fact that you're going to end the contract within, I think it was 60 days, then we're going to automatically renew you for another 12 months.
Yeah.
And that's contractually binding, right? So I said, all right, that cost us $18,000 of an extra year of contract that on technology we didn't need. Yeah. So why don't we build a system around it? Why don't we build an alert system that says, okay, you have this vendor that's renewing as you're running your mortgage business. Well, it's going to start alerting 60 or 90 days early. A practical example, we have a DocuSign agreement. It's coming due later this month, actually. 90 days ago, I sent a cancellation notice with an option to renew. So just in case, as we're renewing today, I can choose another vendor, although we'll most likely still use them.
Yeah. The technology. So tell me a little bit about like what you said you're looking to maybe expand it out a little bit. What does that look like for you? And tell me what that customer, the end customer, who would be your target end customer today?
Yeah, absolutely. It's not going to be for everybody, as we had talked. My personal belief of moving from broker to banker, moving from broker to non-del, takes first and foremost a mindset shift, right? There are some great mortgage brokers out there. There's some mega brokers that are doing a phenomenal job in the marketplace, but the average mortgage broker has transactional mindset, right? And I know you talk a lot about that of, where can I place this loan that feeds my comp plan the best while I'm on the golf course. And, there's nothing wrong with that.
No.
But the non-del space is transformational mindset, right? You have to look at your business more from an ivory tower of how do all your systems kind of work throughout that.
Right.
So that said, our technology speaks very, very well to that. And, that being said, it's going to, we're going to whittle it down to a select group to take kind of the next stage, 5 or 10 that understand the platform and understand kind of the all-in mindset of operationally how it works. And that could very well look like a franchise or a platform license. We're a big fan of doing the same thing the same way every single time. And that works with our platform, right? As you start the loan, it goes through basically every click. You're doing the same way the whole way, all the way from origination to purchase to the investor.
So what does that look like for you? I was just talking to someone yesterday. My go-to joke is 2020 to 2024, every conference talked about non-QM lending and how to implement it. 2024-ish, late to 2000 beyond, it's going to be all about AI. There's going to be 1,000 AI panels on a go-forward basis. What does that look like for you, and how are you trying to leverage that into what you, because you got that, you have the passion for the technology. So how are you trying to layer AI into that?
Absolutely. It's a great question. We have multiple definitions in our shop of what AI is. Obviously, there's the ChatGPT, there's the bots, there's the intelligence there, but also we like to call it embedded intelligence, right? Okay. One of the problems that I see with technology since day one is over-featured. There are all these features, right? So, a robot rocketing it off, no pun intended, to the moon using a toaster can originate a loan now, right? Whereas all that's really needed is the borrower wants, what's the PITI, what's the cash to close? Yeah. So long story short, with our technology on each individual page, there is intelligence, embedded intelligence that helps the user handle the borrower expectation or what the borrower needs when you're in that stage, right? So lots of embedded intelligence along the way. And then the ability to integrate more of the traditional or formal AI tools, the bots, the intelligence as needed, because our framework is a framework platform. So that can be implemented as needed as we grow. Because you're right, we're in the midst of a change and it's going to start moving a lot faster the more it grows.
Yeah, I think, everyone's trying to, I love the advancement of AI. I think it's super great. I do have one big fear, which is protection of consumer data, right? I mean, I've seen it live, people dumping in tax returns into ChatGPT to say, what's my income, and it gives the feel that it's all protected and safe, but it's just, there's got to be some talk and conversation about what protection of consumer data is going to look like in our future. Without, as fast as the AI is advancing, how do we continue to protect the consumer's data? I'm sure that's on your mind as well.
That and intellectual property data, right? So as I asked ChatGPT on how to help me write a code with our team, what am I giving into that? And making sure that I do have very like test cases, fake dummy data, phantom data that I'm uploading to show them kind of the scenario. I think you're right, Matt, and I think a lot of it's undefined, right? I think the next couple of years, are the lawsuits going to happen? What's going to happen to kind of respond to that? And like I said, I think there's multiple layers of AI. There's the platform that all the AI that's changing the world, but there's also embedded AI that you could build, or someone like I with our team can build some intelligence on this page, on this function to manage that is now our intellectual property that's not out there, right?
Yeah.
That's protected from data loss.
So Joel, I want to go back to about the non-Dell space. And as you're speaking, like your intelligence and your knowledge, it comes through, and it's almost like you run 1,000-person organization at your company, right? And I know that you don't. So talk to me a little bit about the non-Dell structure that you have, because one of the biggest objections I've heard recently is, I'm going to have to add a ton of staff. And I just, knowing your shop a little bit, I don't think you need to have a ton of staff to run a very efficient, very fantastic non-Dell organization.
Agreed. It's, once again, mindset, right? It's shifting of that mindset. Doing all the diligence of what's needed, like I said earlier, the MERS, the insurance, the relationship with you, things like that, and the investors. But then also dialing into a process that's repetitive every single time and understanding that process. Obviously, that's where our technology could come in to help.
Yeah.
But I also think that back to that mindset concept is that the traditional way of mortgage lending, where you need 1 or 2 or 3 or 4 processors to handle a loan, is no longer there, right? You're no longer needed. For example, we've been able to handle the assistant or define an assistant role all the way from basic loan admin to pre-underwrite structure to scrubbing conditions to working with the underwriters, and then taking a huge leap over to the closing, the compliance, the post-closing, the ordering the wires. So we have a very, very small shop. We'll probably do 75 million this year. 3 total people, and I count only as half, because half my day is running around on the technology, right?
Yeah.
So, the mindset, number 1. Number 2, shifting your perspective of what you think is needed to actually run the non-Dell. And number 3, really committing to that channel and going all in with the process.
Yeah, I think you got you absolutely have the right mindset about running the business and making it run as a non-Dell shop. I love what you say about the Ivory Tower. Look at your business from the Ivory Tower and how would you want it run. I want to get you out of here on this, Joel. So technology, I saw it. I thought it was fantastic. How do people get a hold of you to kind of get an idea of what you got cooking over there?
Absolutely. Obviously, reach out to me. Phone number, I think you're going to leave that, or email address. But also, bring me into a dialogue if you are struggling with something. I'd be more than willing to help. I mean, that's kind of my passion of kind of sharing. And once again, there's a lot of knowledge, but the knowledge wasn't just given to me.
You stepped into the knowledge. That's the great thing about you, is you stepped into.
I stepped in and I got beaten hard at times, right? Got beaten up. So it's learning from that example. And if I could help somebody take all of this and bring it to there, then absolutely, I would love to do so.
Awesome. Well, thank you, Joel. Thanks. Appreciate you taking the time, joining the Non-Dell Influencer podcast, and we'll look forward to seeing you again soon.
Yeah, thanks, Matt, for having me. I appreciate what you're doing with this channel. I think it's great for our industry.
Awesome. Thank you, man.
Thanks for tuning into the Non-Dell Influencers podcast, powered by First Funding. For more resources and episodes, visit nondellinfluencers.com.